And ladies and gentlemen, breaking news, we are now just moments away from the Federal Reserve's decision on interest rates. Joining us now to break things down is AIER economist Edward Stringham. And Edward, the expectation right now is the Fed will cut rates by 0.25%. That seems to be what the market is expecting. Not sure what you're expecting or what you think the data is reflecting and where the Fed will go.
Sure, yeah, I think all signs point to that. Powell's been talking about this for a long time. The dot plots, the forward guidance of the Federal Reserve officials all indicate that. That's also showing up in futures markets. So I would be shocked if anything different from that happens. Longer term, they're talking about maybe even another 25 basis points towards the end of the year. Futures markets are showing a 50% chance of that happening by December. So I do think it's interesting. I was kind of excited that the interest rates were going to go up to normal levels for the first time in 10 years. And now, like, nope,
How quickly
we're going to
things
put them
change.
back down to zero.
But I can't help but feel concerned because we're not in a recession. The last time the rates were cut, we saw was in 2008. That was a huge financial global crisis. So what if we're taking the slack out of like that tool that we like to use as an emergency if there's a recession? What if, it's not as effective next time?
Certainly. So I think it's kind of an odd time to be cutting rates. The economy is doing really well. Markets are doing really well. But then they talk about these headwinds, the trade tensions, which are really, as you were talking about a few minutes ago, taxes on businesses.
We've seen GDP growth slow, too.
Right. So I think the Federal Reserve is trying to actually paper over what are real problems for international commerce and international corporations. And I think that's muting the effects of what I think are very harmful. So it's kind of playing cover. Powell's in this kind of awkward situation where he was announcing one thing, we're going to be raising rates at the end of last year. And now the president's, what are you doing? You got to do this. Don't do that. And so he's always like, I almost feel a little bit bad for him.
Do you think that's really what has forced him to do this now? It's not the data necessarily changing.
It's unclear to me. I think probably he would have done this independent of the president. But the fact that the president is always like, no, you got to be more expansionary, cut rates. Maybe that could influence his decision. I just don't know.
For now, nonetheless, we're expecting the 25 basis point cut, so we got that. Edward Stringham, thank you so much for joining us.